India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. The market is going to be in focus after, of course, what we woke up to yesterday. Is there going to be some recovery? Yesterday, it was not all bad. It might look like that if you just looked at the Nifty, but the broader market, once again, did not nearly as badly as what we thought. Well, this is, of course, another edition of Bazaar, and I'm Prashant. With me, my colleagues. Nigel Surabhi is back with us. A bit of a patchy throat still, Surabhi, but much better.
Recovering. But hey, guys, I had to come back. What did you guys do to the market this week while I was away? No jokes about. But I also had to come back because, all of us are trying to manage our, couple of days of leave here and there. So for the three of us together, it's our last Bazaar of 2024. And it's been a great ride, folks. So thank you for it.
I mean, thank you for it, and thank you guys for it. And we just offer like
for a few, yeah, exactly. It's just a couple of days.
Bigger than
no, it's not. But yeah, I'm just trying to make it grand this Friday. So.
Yeah, that's right. It's a Friday. It's the last working day for me on 2024. It's been a great year.
Yeah, 2024.
Yeah, 2024.
So
yeah, let's get straight to the action, Prashant.
Absolutely. But guys, keep watching because if you're taking a holiday, happy holidays. But otherwise, I mean, programming here will of course be very much on. We're not signing off.
Not at all. We're just trying to feel happy
anyway,
this Friday.
So let's just quickly run you through what you need to know as we start another trading session this morning. So you got the S&P, which ended absolutely flat. The Nasdaq was flattish as well, and you got the Russell 2000, which was down 0.6%. So continuation, but very small cuts coming through after what we had the previous day. At the macro markets, look at the 10-year yield, another 5 basis point jump after the 10 the previous day. We are at about 4.56. Dollar index, another third of a percent. So about 1.2% the previous day, immediate post FOMC reaction. And now we're at about nearly 108.5. This is the problem area, especially for emerging markets. Now, and by the way, data which came through last night out of the US kind of reaffirmed with the hawkish turn or whatever you want to call it, what the Fed did. Because lately data has all been strong and this was largely in line with the stronger data. So GDP numbers, initial jobless claims all beat expectations in that sense in a good way. Initial jobless claims were below, which is a good thing. Now, the risk of a US government shutdown, and we highlighted this yesterday morning as well, is rising. The deadline is tonight basically, 20th of December, midnight is the deadline. Last night, a Trump-backed plan to fund the government failed. So basically, Donald Trump and his sort of incoming vice president, they basically proposed that let's not have another vote on this in March. Let's have the vote now. Let's have the debate now. Let's pass this now. And let's not have a ceiling for another 2 years. Well, that got shot down. So we'll see. Unless and until today, there's something, they're able to come up with something, and this would typically need bipartisan support. It's likely that the government actually in the US shuts down. The actual economic impact is likely to be very limited, especially if the shutdown is brief. It largely affects, government employees are paid a little late. Economic data releases come out a little later. Largely that's about it. Unless and until, of course, it stretches, and that's not the base case at all. Just to come back and tie in the levels here. So as I said, yesterday the frontline indices saw damage, but then it was broader markets nearly not as bad. Even frontline indices, all you had was the first 45 minutes, 60 minutes of volatility, a big swoon and then a bit of a recovery, and then it just flatlined for the next many hours till all the way into close. Nothing happened after that. So the Nifty was able to defend 23,900, the level we put out yesterday, almost exactly there, and then bounced. Nifty Bank ending above 51,353. So intraday, the initial open was below this, and then we never sort of touched it again, ended comfortably above it. So these become the first very near-term sort of levels to watch. After that, support for the Nifty comes in at 23,675 to 23,775 zone. These are again very near-term. immediate hurdle, I mean, if you want to talk about the market starting to see some recovery and repair, 40 hourly exponential average is 24,300. 24,301 is the precise number. Bank Nifty resistance comes in at 52,010 and 52,525. And supports for the Nifty Bank will appear up on your screen. And that stands at yesterday's low, which is 51,263. As I said, very near-term levels that we're looking at here. GIFT Nifty should give you an indication how we're likely to start. At the margin, there is silver lining, which Surabhi Nigel will talk about. I mean, a big tech company, Accenture in the US, reporting a beat. So maybe there is some help. But otherwise, it's a 100-point lower start on the GIFT Nifty. Surabhi.
Again, my God, what a week it's been, right? But that's true, Prashant, because even, I mean, despite all of the attempts at a pullback, Wall Street indices did end at the day's low. They could not carry home gains despite that major slam dunk session in the previous day. So that's something that we have to take on board. Anyway, lots of central bank action. So let me start with what China has done. China, like the BOJ, has left interest rates unchanged. The 1 and 5 year loan prime rate, they remain where they were, 3.1% for the 1 year and about 3.6% for the 5 year. In Japan, however, watch this print carefully. Inflation is unrelenting in Japan. It's picked up. The November number, this is core inflation as they call it, is about 2.7%, which is much higher than October, slightly higher than estimates as well. Yesterday, the BOJ decided to stay on hold. It didn't sound hawkish either, despite the stickiness in inflation. And that's because the BOJ said it needs more time to also, parse over the policy announcements that will come in once Donald Trump takes office. Speaking of central bank action, the ECB again has stayed pat, did not change rates yesterday. And that has led to more volatility in the currency space. So I just want to focus on that. The dollar, after taking a bit of a pause in overnight US action, again, there's a tinge of green on the dollar index. It's again at near those 2-year highs, almost 108.50 now is what we're talking about. That continues to put more pressure on Asian currencies. The yen, which weakened substantially yesterday, it was down 1.5% yesterday. It continues to see downward pressure this morning as well. It's at the lowest level since July. Remember July when we had this whole yen carry trade, unwind, etc. play out. So we're not quite at that level, that lowest level yet, but we're very close to the July lows on the yen. For us, the rupee is going to be a big watch point. Remember, the weakness yesterday took our currency to finally break the 85 barrier. So will it stabilize? Will it pull back? Will there be central bank intervention? So currencies remain extremely important to watch. Now, for the Nifty, we are below the 20 DMA, the 50 DMA, the 100 DMA, now the 200 DMA will come in focus. It's still a certain distance away. But not too much, 130 points off. And the implied open is anyway suggesting about a 90, 100 point kind of drop. So let's see, the 200 DMA perhaps will come into play again. There's relentless FPI selling. Whoever said that FPIs are going on leave, where are they? They're right here in Mumbai, seems like it. Look at the intense selling, almost 12,000, 13,000 crores so far this week. And yesterday's number was big as well. Net selling of about 4,200 crores yesterday. Domestic institutions have been trying to offset it as usual. Look at the DII buying. I mean, commendable, right? Almost 4,000 crores of DII buying. But clearly, it's not proving to be enough. Because of all of this, where's the Christmas tree? I'm not really feeling it this week. Let's pull up the tally. Nifty is down, and it's all FPI selling, which is why it's large cap selling. So Nifty is down about 3.3%. The Bank Nifty has fallen even more after the RBI policy. I mean, between last week and this week. This week, it's down about almost 3.7%. Relatively speaking, lesser damage on mid caps and small caps. Now to come to the silver lining that Prashant was alluding to. Yes, IT could be in focus because, there is that currency tailwind, though there are hedges in place. I mean, largely speaking, thematically, weaker currencies help exporters. That's one. But more importantly, Accenture's come out with a solid beat. 9% increase in dollar revenue, 90 basis points increase in the margin in the reporting quarter. Not just that, they've hiked their guidance. So what is Accenture saying? That revenue growth is going to be 4 to 7% now versus 3 to 6% earlier. And it's AI powering through all the way. They've added about $1.2 billion in Gen AI orders, taking the total tally to over $4 billion. Looking very, very strong indeed on those Accenture numbers. So watch the IT pack. And there's important news. This is a CNBC TV 18 exclusive. Watch for OMCs and for airline stocks because our colleague Tim C is picking up that finally, something which the industry has been clamoring for years, maybe at least discussed in the GST Council. What is this? It is the inclusion of ATF, aviation turbine fuel, into the GST framework itself. So it's still at a deliberation stage, but maybe some positive rub-off. But before we get to the stock-specific action, global cues, Nigel, still have plenty to go over.
Well, that's right. The global cues are a little bit murky, and that's a problem. And from an India perspective, we'll be tracking, what the US dollar does, which has moved, to the multi-month highs. In fact, that's at around 108.4, which is, clearly a problem pocket. And that's the highest actually we have seen in the last 2 years or so. That's the problem pocket. And the US dollar yields as well, they continue, US bond yields continue to remain elevated. So both those two, they are not great data points. What happened yesterday? Well, there were some rules that were taking place, given that a lot of people will be going on leave. So there was some lightening of positions that we saw on the futures side. Moving to what do the FIs do? Well, they're not just selling in the cash market, they're adding shorts as well. And sometimes that's a blessing in disguise. So in a single trading session, they added close to around 24,000 contracts, which took their total short position to around 67%. And if you pull up a chart, you'll see that they cut some of their shorts, but now they've rebuilt it. And now they've moved up by close to around, in yesterday's trading session, 24,000 contracts. So they have moved to around 1.25 lakh contracts on the short side. The clients, they're doing the exact opposite. So from around 1 lakh contracts now, they're at more than 2 lakh contracts. And overnight, they're at 10,000 long contracts is what we saw. The PCR, well, yesterday we were highlighting this fact that it is at the lowest we've seen in multiple months, but that's moved up a little bit. You had call as well as put action yesterday. And yesterday you had the end of the weekly series as well. So there's a new series that's opened up. And the 24,000 call, 24,000 put, both of their premiums in that vicinity of around 200 rupees, which brings us to the levels that we should be tracking. The first support zone is at around 23,800. In all probability, we'll be starting off somewhere around those levels. So that's going to be very, very important. And incidentally, that's where the 200 DMA comes in. So 23,800, that's the important mark on the downside. Resistance comes in at around 24,400, and that incidentally comes where around the 20 DMAs. So we're looking at the DMAs, and we're also looking at the options data, and that's the broad range you're looking at. On the downside, you don't want that level to get taken out. Moving to the Nifty Bank, the 200 DMA is 1,000 points away from current levels. Yesterday, it ended below the 100 DMA as well. So that's a bit of a problem pocket. You don't want it to breach that considerably. Given that the tech space could support, you'll want the Nifty Bank as well to give some kind of support. So we'll have to keep an eye on that. And a few stocks have come out of the F&O band. So that list comes up for you on the screen. Keep an eye out on all these three names. So we start off in the red. Don't rule out an intraday bounce. But in the near term, this global queue has gone into a bit of a tizzy, which is a problem pocket from an India perspective.
Absolutely. And let's see if we can kind of, see that tinge of green today or not. But let's start with the equity call of the morning. This is a positive one that's actually coming in from Christopher Wood of Jefferies. He says that Fed Chair Jerome Powell in the post-meeting press conference said that the 25 basis points rate cut was a closer call while expressing caution about further cuts. Still, Greedon-Fear's guess for now remains that more Fed rate cuts are coming, if only because of the unacknowledged need to reduce debt servicing costs from a fiscal standpoint. In this respect, it remains to note that the 10-year Treasury bond yield has risen by 87 basis points since the Fed commenced easing in September. This is not what the central bankers would have expected, and it clearly suggests that investors want a term premium for investing in longer-term treasuries.
Okay, well, he goes on to add in that sort of widely read note that some adjustments will be made in the Asia-Pacific ex-Japan relative return portfolio. The weightings in China, Indonesia, and Philippines will be reduced by 0.5 percentage point each, while the weighting in Hong Kong will be reduced by 1 percentage point. In India, he says, the weight will be increased by 1 percentage point, and the Singapore by 1.5 percentage points. We'll put out some specific stocks, etc., in terms of changes in that portfolio in a bit from